How's it going, everyone? It's Sam. Today we are talking about something that's a little bit scary, and it's not FUD. It's not talking about the crypto market or the stock market in a bad way. It's something that's scary that will force, I think, cryptos to go up over time and other assets also, but specifically crypto. Now, I'm not an economist, so just know that off the bat. I'm not a financial advisor. I'm not telling you to do anything with your money, but I think if you look at what's happening in the US right now, specifically because we hit a major milestone and what's happening across the world, it's very clear that cryptos will go up over time. We have people throwing out huge numbers for crypto because they see what a lot of other people don't see, because they are looking years out and not just a few days, not looking at the Fed tightening or anything like that, but looking at some of the massive problems that we face in the world today. So I want to take you through those different problems and talk to you about some of the news in crypto today and how that intertwines with what I am trying to get across to you. Now, if you guys don't mind hitting the like button and subscribe button, I really do appreciate that. There is a link underneath the video to Masterworks. So I don't know if you've looked at this before, but in times of high inflation, the art market actually does really well. So contemporary art annual appreciation since 1995 has been 13.6%, which has beat the S&P 500 by 4%. And when you look at different hedge fund managers, they can't even beat the S&P 500, but you can see that it is severely outpacing the S&P 500. It averaged over 30% over the last 2 years over on Masterworks. And you can get started with really no minimum. You can just start investing here today because it is very hard to get into art if you're just trying to buy a painting, and it is highly risky because you are investing in one painting. So if you get your hands on a $5,000 painting, it really depends on what that artist does if they come out with a lot more art. So buying something like a fractional share of, let's say, a Banksy can do great for you, because that way you can buy that, but you can also invest in other places too. So if you guys want, you can check out the link underneath the video to this. I would definitely suggest it. It is a nice place to kind of diversify away from some of the other assets that you have. Now, let's talk about the massive problem here today. The national debt just passed $30 trillion. It's amazing. Right now, every 40 seconds, this goes up another $1 million. Now, the massive problem with this is we've seen it accelerate recently. We've seen it double over the last 10 years. So yes, a big number is scary, but unless we actually see it getting much worse, it's not really that big of an issue. But you can see that it really hasn't gone down. We've tried to make it go down a couple times, but it just hasn't done anything. Now, how does the US actually combat this? Because they only have so much revenue coming in, and obviously it's not enough to actually pay down the debt. Well, they can issue debt with bonds. They can manipulate the interest rate, they can institute spending cuts and raise taxes. So let's look at a few of those right now. So the first thing they can do is lower interest rates. So they say this is the most painless way to lower the interest paid, but it's a problem because of the fact that we have high inflation. So they need to raise interest rates because otherwise a lot of people are upset that they can't even afford some of the stuff that they've been trying to buy. There are also supply chain issues. So right now we need to keep interest rates low. I know that a lot of people are worried that we're going to raise them like 7 times this year, which they are going to raise them because they need to combat inflation, but they also can't raise them too quickly. So they're on this tight balance beam where they have to be able to pay off their debt, or at least keep up with it somewhat, and then they also can't crash the stock market at the same time because a lot of people are depending on that, and then they also need to make sure that they don't have inflation run away from them. So what do? Okay, well, they can increase tax revenues, but voters don't like this. They don't want to vote for politicians that are going to make them pay more in taxes for stuff that they don't care about. So they've got themselves into a hole. We don't want to vote for us to have to pay more taxes. And then they can cut spending. Okay, but then who are they cutting it from? They either lose jobs or people are pissed off because they're getting their benefits slashed. So they're in this tight spot where they really need to keep interest rates low long term, which is great for crypto because there's only so much Bitcoin out there, specifically Bitcoin. And the Fed is going to continue to print more and more money. Now, this shows how strongly people believe in Bitcoin. Look at the illiquid supply. Just continues to go up. We are at a 3-year high on illiquid supply. We also have the number of addresses with a non-zero balance continuously going up. Total supply held by long-term holders continuously goes up. And we do have the hash rate, the computing power going up. So this is one of the most secure things you can, one of the most secure networks in the world, if not the most secure network. Now, this is spreading too. We have it spreading to other countries. Facebook meets with Brazil's tech minister to expand the adoption of the metaverse in the country. And we've seen Brazil really start to go all in. Meta filed a trademark with Brazil for crypto products and services related to trading, wallets, exchanges, and platforms. We also have a Turkish crypto company that's in talks about an exchange in Brazil and Spain. We also have the world's first DeFi ETF to launch in Brazil next month. And we did have some news that people thought that Brazil was going to make crypto legal tender, but they're really just regulating it like a lot of other countries. They say companies interested in the virtual asset space will have to be allowed after they register and receive a permit. So that's what we're seeing with Facebook. That's what we're seeing with other countries too. So they are opening the gates for people to come in, but they're going to tax them, right? That's a great way of increasing innovation, making companies come in. Large S&P 500 companies, some of the largest in the world, like Facebook, want to come into Brazil. So that's really fascinating. We also have other countries like Botswana that agree to regulate trading of crypto. We've seen that in India recently too. They went from banning it to now regulating it. Same thing with Russia. So a lot of countries are getting into this, and it's not just countries, it's also brands. Brands see the potential for crypto, especially NFTs. For these brands, it makes more sense, I think, for NFTs right now because of some of the accounting rules with crypto, and it just makes more sense. You can create a community that buy these products for you and create like this club. For example, this year we had Taco Bell, Pizza Hut, Pringles come out with their own NFTs. Even Visa bought. We had Budweiser buy. We had Adidas and Nike buy also. So they're using Ethereum. They're using other cryptocurrencies to make these NFTs or to buy them, stuff like that. And then we do have some major companies also buying Bitcoin. So we had Tesla, we have MicroStrategy, we have some of these other ETFs and trusts. But as time goes on, once the accounting rules change, I think we'll kind of open the floodgate. I mean, yesterday we saw Google with $140 billion on their balance sheet. And when you think about inflation, that's cutting at 7%. That's cutting about $10 billion out a year that just burns away to inflation. So at this point, there has to be some other strategy that can help them diversify. Now, a $1 billion buy doesn't really change their balance sheet much, but that would be huge for crypto. So I think that's just something to pay attention to over the coming years. We're going to have more and more companies get into crypto, more and more companies get into NFTs and buying Bitcoin. And there's only so much to go around compared to the US, where we are just going to continuously print more and more money. I mean, since the beginning of this video, we've had a couple $1 million, about $10 million, $20 million more in national debt. So thank you guys so much for watching. I really do appreciate it. I think it's just something to pay attention to because there has to be a change at some point, or we're just going to continuously go up in debt, but they're going to have to keep interest rates low because imagine they start raising them. Imagine the debt service that they would have. Imagine the interest on that debt on $30 trillion. So let me know your thoughts on this underneath the video. Definitely check out the link down below to Masterworks. I think it is a great place to start investing and get away from some of the typical kinds of investments and maybe diversify a little bit. Thank you guys, and I'll see you in the next one. Bye.